Hey everybody, this is Jose Blasco. We are about to get started. Can I have a quick sound check, please? Thank you so much. Just a few seconds to go. Thank you, Ahmed. How are you? Good to see you, my friend. Good to see everybody. It's the top of the hour. Time to get started. Let me turn on the video stream so I can say hello from the bottom right corner of the screen. How are you, everybody? Welcome to the session, everyone. Today is October 2021. This is Options with Options. My name is Jose Blasco. As always, we're going to be looking at the options market, ready to put some trades out there, ready to manage the trades that we have, learn from all those experiences. For sure, I am open to receive your questions as the session progresses, and please do not be shy and interact with me as much as you'd like, as much as you need, so this session can help you to the best. Before we get started, as always, I would like to highlight the disclaimer on the upper left side of the screen. Please read it carefully. This is important information. Read it completely. I am counting on you to read it fully, as it is indeed important information. How are you, Christian, Maka, Fernando, Jeff? Everyone is very good to see you guys. So agenda for today, the sequence, it's first we look at the market to see what's happening out there. Amazing moves, by the way. We'll look at the trades that we have. We'll talk about trade management and how to work those positions, how to massage them, if you wish, in order to try to minimize risk, maximize efficiency when it comes to probability of profit, as well as the size of the profit itself. While maintaining the risk under control, and from there we'll move into finding new opportunities. Okay, so that's the plan. I'm just looking at the other streams. Everything seems to be okay. So my friends, it's time to get started. And you may have noticed that today I was starting the stream almost with a little bit of delay, almost. And it's because, just like the other day, I'm having a little bit of problems with my video camera for whatever reason. I'm not sure why. I think it's a lighting issue. So hopefully everything's gonna be okay. I think that it looks okay at the moment. Let me know if at any moment in time the video stream is not working well, so I can just turn it off. The chart is more important than me, I guess. I guess it's nice to be connected with a video stream, but at the same time, I guess that you could pass if that becomes disturbing with the background moving around. Okay, so please let me know if that's the case. Okay, let me see. Yes, SPY almost all-time high. So yeah, so let's begin with the analysis, Fernando, because indeed amazing moves. Okay, really impressive. What's happening out there in the markets. Okay, so let's begin. So this is the S&P. Okay, and we always begin doing our analysis of the climate of the S&P on a daily time frame. What is it that we have? We have a confirmed climate. Why is it confirmed? The dot is thick. It's a blue climate. It's a blue dot, meaning it's been 4 days into this climate. Statistics suggest that the duration of the climate would be of 5 days. So then we should expect today, we should expect tomorrow for this market to continue moving higher. But I would say, very strong note of caution, if moving higher at a very decelerated pace, that would be the expectation. And here's why, even though we are approaching all-time high. So here's why. Notice the current level for our ATR spread is 144. Notice what the max distance suggests a 2 standard deviation of it is in the case of a blue climate, which is 101. So in other words, we have surpassed by far how far and how fast price has traveled. How are you, Joanne? Good to see you. And in that sense, while there is still a little bit, theoretically, there is still a little bit of time left to remain in such climate. 4 out of 5 is another, today, and another day is 2 more days, right? The reality is that we could see anytime a very severe correction because this market went too far too fast, and when that happens, typically it is not sustainable. Okay, now again, all of these are statistics. Okay, so again, it doesn't mean that now we need to bias ourselves. I always make these comments because trading psychology is one of the most important components in trading. And out of doing an analysis, next thing you know, we may subconsciously bias ourselves. So we want to make sure that while we understand what's happening in the market and we want to position the various positions in our portfolio accordingly. uh, the fact is that we don't want to bet too hard on any direction just because the market seems to be now in an unsustainable stage, like it's been in other cases. Okay, because you probably remember at this stage we were talking about how this was unsustainable based on stats, because statistics suggested 2 is the duration of down climates, and notice this down climate really lasted so much more. So something not sustainable could sustain. But again, probabilities are there to indicate what is the smartest move, which in this case would be for another day or two for this to continue moving higher. I would expect it at a very slow pace, or maybe just kind of like be flat and go down, go up, and stay in a range somewhere in here, to then become a down climate for a couple of days, and then from there push again. And now we would have a very, very, very healthy breakout of the all-time high, and then we can find very amazing opportunities to ride very strong moves with certain stocks. So I'd love to see that the move to the downside begins today. Ideally, into tomorrow, we have a down climate, something like that. So then tomorrow, when we are back together, we can start planning on catching some retracements to the downside in order to be able to catch the next move up, leading to a potential breakout of the all-time high, with the acceleration that this often implies on many securities, many stocks. So we'll keep all of this in mind. But at the same time, right now, as we speak, directionally speaking, it's a tough one. Why? Because if you're going to get long, it's probably too late. And if you're going to get short, could make sense because of what I said. If you have many longs in your portfolio, you should get a little bit of short in your account, so you could hedge the rest of the portfolio. But I'm not going to do it in my case. Why? Because in my case, I got CL and Pfizer. Those are 2 longs. KBH is a short. Okay. And in other words, I got, 2 longs against a short. Okay. And then I got 2 non-directional trades. So in other words, I don't have enough to hedge in my account. So my favorite approach would be to enter non-directional trades. So if the market is going to do some sort of a retracement for a couple of days, something like that, so I could, survive that time by collecting time decay and things like that. And then when the market is ready to push again, then I could enter more longs. That would be my ideal approach. But again, we'll see what the market has to offer later on, because when the market is so, ballistic, it's really difficult to trade it, because if you haven't entered earlier in the week, or in the late part of last week, then you've missed the move, and now it's too late to expect the move to continue, which it could, but it's lesser probabilities based on what we have just concluded. Okay. Anyway, so we'll come back to that later on. Now, from another point of view, we look at the UFOs, and last week, I remember that we were hitting that UFO, and the market started turning in the opposite direction. I remember this was happening as we were in, not sure if it was the Wednesday or the Thursday session, but since then, look at how many pockets of on-field orders have been added to the market, okay, including this one here, there, added yesterday. So if the market falls, which, again, based on what we said, we should be expecting some sort of a correction soon. So if the market was to fall, I would not expect the market to fall too deep, because there is a UFO there, and if that one fails, there is another one there, okay, and that's in the 55-minute time frame. If we look at the daily time frame, notice 446, there is another UFO, even though the daily time frame on the S&P is the least efficient from an order flow analysis point of view, because many orders get canceled when the market closes. Not the same in futures, but definitely on the ETF. So the 2-day time frame is definitely stronger for us to do the analysis. And notice how 447, we got plenty of on-field orders, 2 green UFOs on top of each other. So again, if we have a retracement, it should not be anything that dramatic, and those UFOs should be in our right position and ready to start pushing prices higher, leading into this all-time high. Okay, so we'll see how we can position ourselves later on, depending on what's available, because of course the concern, and probably you are thinking about it out of kind of like the routine that you are developing and acquiring through the sessions, you're probably thinking, Jose, you said non-directional trade would be great, but the VIX is probably very low, right? And let's take a look at the VIX, because it is very low. It's currently pointing at 15, meaning that doing Iron condors today is going to be really tough. Why really tough? Well, not only because implied volatility is very low, that's going to make it tough, but on top of that, because let's go back to the S&P and look at what's happening to the volatilities. So if I come in here, take a look at what's happening here. Okay, take a look at what's happening. So we got two of the blue lines beyond the red line. The red line represents the expected ranges based on implied volatility, where the blue lines represent the expected ranges based on historical volatility, which is the real speed of movement of the stock. Okay, the real speed of movement that took place. The lighter line is in the last month. The intermediate darker blue line is in the last 2 months. The darker blue line is in the last 3 months. So notice how in the last month that stock has been traveling very quick. Okay, and of course, you have these very strong move downs, very strong move up, amazingly strong move up. This is a lot of historical volatility, and notice that the statistical ranges are very wide. So what does that mean? It means that when we do our range analysis on stocks, the majority will suggest designing non-directional trades, that are going to be very wide ranges, which is great. But what's the problem? With the very low implied volatility, next thing you know, you're gonna be paid peanuts for those options that you would sell in locations that are very, very far away. And in that sense, that would not provide proper reward ratios for those trades. So today, more than ever, you saw last week where I didn't find too many good setups for iron condors. I ended up finding one with a RCL with Royal Caribbean, even though not everybody was able to take the trade. But you probably remember it was difficult to find those non-directional trades. Today, I would expect it to be more difficult. So I'm going to get a bit more creative later when we look at the markets to try to find a solution to this market environment. It's a long time we haven't seen the VIX that low. Okay, so if I go back to let's say a weekly time frame, for example. So okay, so I'll just load that daily time frame here, and if I zoom out, okay, that's good enough. So sorry, this is not a daily time frame. This is now a daily time frame, which is loading. Very good. So the last time that we were at these levels were in June. Okay, so that's 4 months ago, and before that it was in February 2020. Okay, it's right before when the world got crazy with the beginning of the official beginning of the pandemic, if you wish. So yeah, so that's something to keep in mind, because this is gonna make our life a little tougher, especially not because the volatility is low, but because the historical volatility in the markets is high. Okay, so stocks are moving fast. Okay, they are moving fast, and therefore low premiums. It makes it difficult for us to trade those ranges. Anyway, so this is the market analysis for today, guys. Let's begin looking at positions. Let me take a look at some questions there. Joanne, I was looking at IWM range bound in the weekly and the monthly. Let's take a look at IWM. Okay, indeed range bound in the daily. Let me load the right time frame. Weekly. Okay, not sure why. For whatever reason, I cannot load the weekly time frame. But anyway, we can clearly see that all that amount of data, if we translate that to the weekly time frame, is indeed sideways. Okay, indeed sideways. So your question is there a way to search IWM stocks? Yes. So the way you could do that is that you could get into a website, okay, to find the holdings of IWM. Okay, so let me see if I can do this quickly for you. So I'm just looking for a website here. So on my other computer screen, I'm gonna bring it to the main monitor in a moment. Okay, so this is what I typed. Okay, so I just got a Google search and I typed IWM holdings. Okay, and again, I would need to look at what's the ideal website to get that information. It seems that MarketWatch may be good enough for us to get that. Holdings. Okay, so here are all those stocks. So AMC, NTLA, Crocs, LSCC, all those stocks are the holdings. Well, I mean, wait a minute. This is the top 25 holdings. So you will want to look for another website, which there are plenty to be honest, that would give you access to all the whole list. Is going to be 2,000 companies, right? You're going to have the whole list of holdings, and then what you can do with those 2,000 stocks, you just save them on a comma separated value or a spreadsheet, and then when you get here into the matrix, when you do your search, you can then import a scan list, which is going to be your 2,000 stocks from that belong to IWM. And then, so whatever parameters you have selected, now you filter them based on that list, and therefore all the results that you would get on the matrix would now be stocks that belong to IWM only. Okay, so this is how you would do it. Yeah, FinViz is probably a good idea. Yahoo Finance, I think, is also probably a good idea. Typically, for sure, you get it on the website of the company who created IWM, which is iShares. So there you can find it for sure. Okay, I'll let you do that if you don't mind, so we can continue with the planning. But very good idea, Joan. Very good idea. Because if you are looking for non-directional opportunities and you do it with stocks that belong to an index, which is actually range bound, that increases the probability for the stock to also remain range bound apart from the stock itself. So definitely adding odds in your favor. We know stocks are amazing, but they are fragile. They depend on the sectors, they depend on stocks, which are competition companies, they depend on indices. So you can put that at your advantage by doing what you're suggesting. So very nice thought, Joanne. Thanks for sharing that with the group. Joe, you'd have to be far out in time to get any premium. Exactly. And yeah, and that's going to be a problem. So how are you, Mark? Good to see you. Clive, no worries, my friend. Thanks for saying hi and for joining us today. Not sure that IWM is range bound, but well, technically it is. Okay, now there is no red UFO, so if it starts going higher, it may pick up speed big time. But so far, it's a range market. Okay. Yeah, you would need to get that from an external website. I mean, there are different filters. Okay, you have US stocks. You can filter based on groups. Okay, so that you can do, but we don't have indices like filter based on the S&P, filter based on the Russell. That's not there. Okay, so you can filter based on industries or sectors. It's a better way to say it. Cool. Thank you, Joanne. Ahmed, how to create a list with the same format for list of stocks? Well, if you look at the, let me bring the file. And again, how to create a list. This is a very good question to ask on the Sundays when we do the top sessions. I will answer that because I understand you guys need it. But let me do this very quickly, okay? So we can go back into trading. So I'm just opening the file, which is the penny increment list, okay? And notice that this is just, I'm opening this with a notepad, okay? It's a text document with, one symbol on top of each other, right? So if you have a list of stocks that you follow and that's the list of stocks you want to use, you just put that on a text file the way I'm just displaying to you here. And then, again, on the matrix, you just insert that list, you import that list, that's the right term, and then you can just use it. Okay, cool. Okay, so positions, let's talk about positions. Okay, we got many positions and very little to talk about many. Okay, for example, Intel, that was a trade that was completed on October 15. That was last week, and as you can see, the overall result was $11 per contract. So yeah, that was a break-even trade. If you had commissions and so on, it was a bit disappointing in the end. I mean, disappointing, it doesn't make sense. The market doesn't owe anything to us, so whatever it's going to give us, we're going to be grateful about it. But it was disappointing in the end, in the sense that, the market just stayed in that range, okay, during all the time we were in this trade. Okay, we entered at this moment in time. We never had a continuation to reach our target, and therefore the trade ended up producing a disappointing result in that sense. Okay, but at the same time, it's great. The messaging of the strategy produced an $11 profit per contract, where if we had done nothing, it would have been a loss, right? So good job there, and hopefully good experience for you guys. And now I'm just gonna delete all those rows which we don't need anymore, because that trade concluded last week. Same thing with ADM. This trade is over as well. Okay, so with ADM, okay, actually let me show it to you here on the left. So with ADM, you probably remember that we entered this trade here somewhere at this moment in time. We were expecting ADM to fall, and that was going to be a hedge. Okay, and it did for a while and then started moving against us very aggressively. So you probably remember that we hedged the hedge. Do you guys remember that? We hedged the hedge, and then there was a moment in time where we undid the hedge. That's why ADM is not in my account here any longer. Okay, so anyway, see, if we go back to check what the results of these positions were. Okay, so position. Well, the result you can see here is not totally accurate. It says $18 profit. Okay, it's actually more like break even. Okay, because in here the simulation still accounts for those 33 shares of stocks to be in, and the market went up since Friday, right? So the market went up from 64 something to 64.97. So instead of 154, probably the profit is just a bit less. So if the profit is a bit less, then 19 becomes break even. Let's call it break even. Okay, so again, great example on how managing the trade helps the overall performance. Okay, so again, the concept here is, of course, we make money by being right, managing the risk, reaching our targets. That's how the account grows. But if every time we are about to take a loss because we are wrong, which this is a clear case, I was absolutely completely wrong in direction, but instead of doing nothing, you work on the strategy because options give you options. So next thing you know, now you end up with a break even, small profit, small loss, instead of full loss. And when you do that throughout the year, then the difference in performance and safety for the trader, it's quite different, even though I'm using the word different twice in a row. So again, I guess good example. Of course, not ideal. Would love to see a bit more of the profits, which didn't happen in the recent times because I was loaded on longs where the S&P was going down, and therefore some of those trades didn't work too well. Okay, now CL. Okay, CL is the next one that I would like to examine with you. This is, as you can see, it's a 76, 77, 81, and that means that this is a directional butterfly. So let's examine this trade. Okay, I'm going to bring the risk graph. Okay, also I want to bring in Colgate-Palmolive here. Okay, because that stock is just a teaser. Okay, so when the stock got into our speed bump, we got UFOs there, started moving higher. Then the S&P started pushing lower. It went down very much. Then it started going up very strongly, and then the S&P went lower and went down again, and now it's coming back up. Right. So what a teaser. In any case, it's what it is. Okay, it's what this trade has done. And while we enter this trade with a specific methodology, we had to tweak this trade to end up in a better position. So if you recall, this trade was entered by selling two bull put spreads, which are the ones I have here. Okay, 76 and 77, and I have two of them, and those are puts. So these are two bull put spreads. Okay, and those two bull put spreads were paying for the 81 call, as you can see here. This created a net credit of 23 cents, but the risk of the trade would be the difference between 77 and 76, which is $1 times 2, that's $200 minus 23. So you can see here that the maximum risk of the trade is 177 since the beginning of the trade. Yes, Maka, you're right. It's not a butterfly. I just got mixed up when I said butterfly. I meant to say that next step, it's probably going to work on butterflying what we have here, because for a while it was not working for us. So now achieving the target is probably going to be not possible. So we're going to butterfly it. Okay. But I was kind of like speeding up my thinking process and phrasing what was not the moment to phrase yet. So anyway, so going back to this, okay, so where are we at the moment? Okay, so this trade, as we speak, is producing $92 of negative P&L. So of course, the stock went against us, so we are in this portion. That's where we are. So if nothing happens and time passes and the stock stays where it is, we're gonna lose the $172 maximum. And of course, if we were to reach the target, which the target was located all the way there at 82.94, okay, at 82.94 out there. So if we were to reach 82.94, of course, now we're gonna make, all this very nice profit of $200 per contract. Thank you very much. But the reality is that achievable? Okay, is that achievable? Okay, and it doesn't look like it. Okay, if you look at this magenta line here, this represents one standard deviation based on historical volatility. And you can see that, if lucky, we're gonna reach 77. It doesn't look like we're gonna reach, anything higher. Okay, it doesn't look like it. So what can we do? Well, let's explore our choices, because now that the stock moved a little higher, it's not like it's so much, but I believe it's a bit higher than what it was last week. So maybe we can do something about it. Maybe we can butterfly the call we have, or work on the put side in a different way, and maybe we can go ahead and get a benefit, in that particular scenario. So let's see what is it that we can do in that particular case. Okay, so option number one, it's while it's going to be very difficult to reach our target. Let me put this here on the left. So while it's going to be, because I want to do some writing. Okay, so option number one, while it seems that it's going to be very difficult to reach our target, okay, remember the original trade is buy the 81 call, and in order to do that, we were selling 2 of the 77 put, and we were buying 2 of the 76 put. Okay, so this is the trade that we have. So now current price is 75. Okay, so we are actually below our protective strike. Okay, so that 81 call, it's currently trading in between 0 and 0.005. So we cannot really do nothing at all with it. It's just like we cannot use it for much. Okay, so we are quite stuck, because if there was some premium on the call side, so maybe we can sell calls above, we can do things about, but none of it's really doable at this moment in time. Okay, so we are a little bit in a problematic situation. Okay, so we're gonna have to get more creative to try to find a solution to lower the risk of the trade. Okay, at this moment in time, this is a trade that is looking like it's not gonna work well. Expiration date is October 29, as you can see on the screen. October 29 is next week. So we are very likely not going to reach the target up there, and therefore, if the trade is not going to work well, I am in defense mode. I am in damage control mode, trying to find a solution to reduce the risk. And in a perfect world, now I give myself an opportunity to make a profit in a different way, but that's going to be very difficult at this moment in time, given how intense the price of that stock has been against the trade, plus the amount of time it stayed against the entry, against the price at which we enter, and because of all of that, it's going to be very difficult to help. Okay, now what can we do? Okay, what can we do? Well, the trade has a risk of 177. That's the risk of the trade. Okay, so let me add another compare spread. Okay, and I'm going to copy the primary so we can go ahead and compare. So I have on top the one which is blue color, which is the original one, and below I have the orange color, which is the one I'm gonna play with. And what I'm gonna do here is I'm just gonna leave the 81 call alone, because really, if I close it now, I lose, and I'm gonna have to pay a commission to close it at 5 cents. So I rather leave it alone, and if magic something miraculous happens and the stock just goes to the moon, so that 81 call may make some money. So I'm just gonna leave it alone, because it doesn't help me to close it. Okay, I may even have a little bit of an issue to close it, because I need to sell it, and the bid is 0. So no one wants to buy this call, right? So I may not be able to close it. So I'm just going to leave it alone, right? So therefore, the way I'm going to try to help this trade to produce a different outcome, ideally by reducing the risk, the way I'm going to try to make that happen is by I'm just having multiple thoughts at the same time. Sorry for that. It's by ignoring the fact that they got the 81 call, and I'm just going to be keeping in my mind I got 2 of the 77 put, and I got 2 of the 76 puts below. And the idea is, what else can I add to those 2 guys? Okay, and remember there are 2 of those. Okay, so what else can I add to those 2 guys to generate a risk similar to what I have, while I may give myself the opportunity to make some profit in a different way? Okay, and the one thing that comes to my mind, okay, the one thing that comes to my mind would be, because we are below 76, okay, because we are below 76. So the one thing that comes to my mind is that probably it's you know, if you recall, when we talked about trend managements for iron condors, right, where you have an iron condor, which an iron condor is made of a bear call spread above the range and a bull put spread below the range, right? Which a bull put spread is what I have on the right, even though I have 2, not 1. So what do we do when, you know, an iron condor, its range is being broken? So we learned in prior sessions that you go from an iron condor risk graph, which is like that, to an iron butterfly risk graph, which is like that. And sometimes this saves the problem. Okay, so how can I butterfly these 2 bull puts, okay, and see if the new risk the trade has and the new break-even points and risk graph makes sense or doesn't? Okay, how can I do that? Well, remember, an iron butterfly would be made by selling the same strike you have short the put with a call, okay, and then I would be buying a call above, in this case 78. Okay, so we could do something like that, okay, and we could do it with 2 units, or we can get more creative. I'm just going to try multiple choices. Okay, it's going to be a tough one, but I'm just going to try my best and see what happens. Okay, so let's see if we can do that. And this, you know, by selling the 77 and buying the 78, so now, you know, as long as the stock stays more or less where it is into next week, we may save the problem. But again, it all depends on how much premium we can get, which with a very low VIX, I guess it's going to be tough. But let's try. So I'm going to add an option leg here, where I'm going to be selling the October 29, 77 call at the midpoint, which is the current price. And then I'm going to be buying 1 of the 78 call at the midpoint. And because I got 2 of the puts, I would need to do 2 of the calls. Okay, so notice that I have this weird 81 call here in between, which basically those $61 I paid, I lost them already. So I'm just choosing to forget that exists. And let's see how much I get paid for the 77 and 78, which, you know, we'll see in a moment. And notice that if I was to do that, so now we end up with 40 cents for the call I sell, 17 cents for the call I buy. And therefore, this produces a new risk profile with a risk of $132 instead of a risk of $177. So again, it's not magic. It's not like something that is, you know, that impressive or anything like that. But by doing so, I do end up reducing my risk, and I do end up with a little area there, okay, from here to here. Remember, I'm looking at the orange line now because the new trade, it's the orange one. So notice that this one has a break-even point between 82 and 76.6. So if the stock was to end up between 82 and 76.6, which the current price of the stock is 75.48. So in other words, the stock will need to rally a little bit, but not too much. So then, as long as the stock ends up in, you know, somewhere in here, actually we may end up with a profit up to $75. But that would be, you know, such a coincidence if the stock was to end up exactly at 77. So again, the outcome of this tweak, it's, to be honest, very, very, very similar to what we have seen in prior sessions when we've been working and massaging iron condors. We've been rolling either the put side or the call side, and then the range has been broken, and then we converted the whole thing into an iron butterfly, and we ended up with that little triangle, kind of like an iceberg poking out of the water, something like that, where you are much more likely going to end up with a loss, but the loss is reduced. But you also give yourself a second chance to maybe end up with a profit, which does require a little bit of a component of luck, let's face it. Okay, but it's what it is. Okay, better to do that end up in an almost sure thing loss. Okay, which is greater. 177 is greater than 132. So this particular approach could be an option for us to consider. But I would like to have another comparison, okay? Which now I'm adding a fuchsia spread, because the thing is that I got 77 and I got 78, okay? But because the expression date is very close, so there are other strikes available which are 50 cents at a time. So I would like to try and see what happens if I do 77 call at the midpoint. And what if instead of buying the 78, what if I buy the 77 and a half? Okay, because this is going to reduce my risk more. So I would like to look at what happens if I do that. Okay, and now in this case, my risk becomes 147. Okay, which technically speaking, I have less risk because the distance between strikes is only 50 cents, but also because the 77.5 cost me more. So then in the end, it's not really helping as much as it could have. And then, yes, I am indeed reducing the risk, but less, okay? Less. So I'm not happy to do that. I'm not happy to do that. What if I was to get a bit more creative? And if I was to use 101 with a 77, 78, okay, and then I was to do sell 2 of the 77, and because I have the 81, okay, because I have the 81, that call is very far away and it's going to introduce a lot of risk. Between 77 to 81 is $4, which is $400. But I want to see what is the net result if I don't add the second call, because I got already a call, the 81 call, which I said I'm going to forget about it. But what if I don't forget about it? Okay, so again, that's another what if scenario that could be worth it to examine. And if I was to do that, my risk is increased to $400. Okay, it's increased to $400 on the total spread. But notice that this is only happening on the upper side, meaning if the stock rallies above 77.5, then I start losing money. Okay, even though based on probabilities, remember the vertical magenta line suggests 77.19 is one standard deviation to the upside. So going above that value should be less easy, and therefore we may not get there, at all. So the question is, let me get this. The question is, how much is that line? Meaning, what if the stock continues going lower? How much is my risk? And now my risk would be reduced to 119.5 if I was to do that, okay, versus the orange case where the risk was reduced to 132. Okay. Well, to be honest, because the difference between 119.5 and 132 is so little, I would indeed prefer the orange scenario. So I don't need to worry about something crazy happens on the stock and the stock rallies 10%, and now I have a problem. So I would indeed prefer this scenario. So this is what I'm going to implement. Was I driving you crazy, my friends, or you guys were following this comparison of different choices that I was putting on the table? Give me some feedback if that's okay. Hey Sastro, I see your comment there. We are dealing with options on equities in this session. Options on currencies are not centralized, they don't trade in a centralized exchange, and therefore we are not utilizing them in this session. Okay. Everybody follows. Thanks for that, Christian. Joanne, thank you so much. Okay, so then the choice is we're gonna go for this trade. Okay, this is the trade we're gonna go for. So I'm gonna copy position to the clipboard. I'm going to go back to top. I'm gonna open my position tool, and under CL, I'm just gonna paste it right there. Okay, and of course I need to see which prices I'm gonna get filled at, because now what I need to do is I need to sell two bear call spreads. That's what I need to do. I need to add a 77 call, 78 call. That's what I need to do. Okay, so I'm gonna do it with TOS. So this is CL. Follow it. Clive is good. You guys just let me know if you need me to repeat, especially now that it's time to execute this thing. You guys make sure you let me know so there are no mistakes. So we're doing 77, 78. Okay, 77, 78. This is what we're gonna do. We do it twice, so we're gonna collect 20 and 20. Okay. Let me redouble check this. I just want to make sure. You're gonna bring it back to a risk graph, so I can graph the new units that I want to add. I just want to chart this, only this, so that way the 77, 78, so I can see the prices. Well, it's 45 because it's 2. If I was to do 1, okay, it's going to be 23 is the midpoint. Between 20 to 25 is 23. So I would indeed suggest to start with 23 and see if we get filled. And then if you have to drop it to 22, 21, whatever, of course, then we'll have just a little bit more risk. Instead of $132 of risk after this tweak, it's just going to be a bit more. But it should not be that much more, isn't it? So let's try with 23 first and see what happens. Okay, I'm just gonna go for 23. Confirm and send. Send. Okay, and I'll be waiting for this to get filled. And you know, we still have time. We still got 20 minutes before the session is over. So I'll be looking into that a bit later. And if I don't get filled, then I'll push it. So it's in the account. So then we can talk about it in the future sessions. Okay. Any risk of assignment? Yes, Jeff. We have the risk of assignment, which is characteristic of the RM butterflies, which we have discussed in prior sessions, which is basically, if I do it graphically again, so if you think about this trade, so this trade would be made of the 81 call, but remember, it's there, forget about it. Then we have 2, okay, we have 2 of the 78 call, we have 2 short of the 77 call, and 2 short of the 77 put, and then we have 2 of the 76 put below. Okay, sorry, 76 put below. So this is what we have. Okay, so risk of assignment, okay, is found in this area between 77 and 78, and between this area between 76 and 77. This is where you get in trouble, where you end up with either long shares or short shares, and you need to do something about it, as discussed in prior sessions. If the stock goes above 78, you're out, because you are exercised and assigned at the same time. You are, technically speaking, I should say, you are assigned and auto-exercised. And if it goes below 76, same story. You are assigned and auto-exercised. So yeah, you are assigned, but not an issue. I mean, not an issue depending on your broker, because if you're using TradeStation, as discussed in prior sessions as well, you will pay $14.95 for assignment and auto-exercise. So that would imply, some heavy cost on commissions that would indeed distort this. Okay, you got filled at 22. Very nice. Let me see if I can get 22 myself. So replace the order. We'll do 22. Confirm and send. Send. Okay. That's it. Got filled at 22. Thank you for the tip, Ahmed. So we got 22. Okay. So this is teamwork. I love it, guys. Okay. So we discover the market. We do price discovery together. Okay. That's amazing. So 40 and 18 cents. Okay. So I'm going to go back to the position tool, and I got 40 for the one I sold. That's correct. And now I'm going to rectify. Instead of 17, I'm going to make it 18, That's what I got. And that way now we can monitor this position into the following sessions that we will have together. We have completed our massage, okay, to CL. Next one in line, Pfizer. Okay, so let's go for it. So PFE. So Pfizer, it's showing a little bit more kindness. Okay, it's moving up strongly, strongly after failing completely. It's now moving back very strong. Okay, like 1.89. Remember what I said the other day, and we still don't know if this trade will reach target or not or what, and we got very skeptical about how high it's gonna go. Okay, and we'll talk about what we have in the account in a moment. But we also said that while those stocks didn't work well for us so far, there were stocks that belong to a strong sector. So if the market was going to turn, we were likely going to be exposed to pushes of an intense energy, like what's happening now, 2% up for Pfizer, while the S&P was moving up. I don't remember now. I think it was 0.5% earlier in the day, something like that. So that's strong, and that's to be expected. That's why when we get into directional opportunities, we get into opportunities that belong to those either strong or weak industries, depending if you are going long or short. Of course, it doesn't mean you're going to profit all the time. Like in this case, clearly it went against us all the way. Okay, the S&P was falling and everything was falling together. But when things go back to normal, then you have greater chance to at least break even or better, instead of getting into stocks that belong to weak sectors and you go long, and then if they recover very slowly, and you may never break even with them when the moment they start moving against you. So we are experimenting that today, which is nice to see, and is something that you tend to see often. Okay, so let's see what we have in the account. Okay, and let's understand this position. So I'm going to use a risk graph again so we can understand better the position. Okay, so notice what the position is all about. Okay, so this position is a position by which we sold 2 bull put spreads to buy the 49 call. Okay, but then the stock went all the way against us. So what did we do? We butterflied it by buying the 47 call and selling 2 of the 48. So basically, if I was to redefine that, okay, so this is 2 bull put spreads, and this is a directional butterfly that was entered in 2 phases. Okay, so now what's the risk profile? So let me maximize so you see better. So the risk profile looks like that, meaning that in a perfect world, we're gonna hit 48. And if we hit 48, which again, when I say in a perfect world, it's unlikely. So you would make about $100. Okay, but in a less perfect world, in a more reasonable world, if this stock continues moving higher, so we're gonna be in this profit area. Okay, which improves as time passes, because we're using November 19 expiration. We still got a few days to go, isn't it? And in this sense, we still need a bit of patience for this to start creating profits based on theta. So if I move the slider, which is the dates, okay, and I want you guys to focus on the dotted line. So if I move the slider, so notice how this line is going back up, up. And when we get to those specific dates, that's it. Now you are in a profit, okay? So we need to patiently work on this, okay? We need to patiently work on this and be ready to continue working on further messages of this trade, which is too soon to do. But let me anticipate, we'll talk hopefully soon about this, which is going to be closing the put side. If the stock continues moving higher, we will be able to close the put side. And the moment we close the put side, then all this risk, which is currently in place, which is $186, all this risk will go away, and then you will be found in a risk-free position, like Intel, for example, the one we closed last Friday. And then from there, if the stock doesn't move, then you break even. But if the stock then moves, then you're gonna make some much more decent profit, putting on the side other actions that we can take in the future as we approach November 19. So we'll see what happens, but definitely for today, I'm just reviewing what this trade is about, but we don't need to do anything about it. There is no action to be taken. Yes, I read you, Joe. Yeah, indeed, all good. So now KBH. Okay, so KBH is a trade, as you can see, that is under the water. KBH is a trade which was entered as a hedge. Okay, and funnily enough, this stock belongs to a weak industry and it's been moving up like crazy. It's kind of it reminds us of the story of ADM, isn't it? That was the same story. Weak stock in a weak industry, and next thing you know, it was moving up like crazy. Hey, that happens, and it's trading. It's also Murphy's law somehow because you got 9,000 stocks in the U.S. market, and that's the one we picked. So that's why managing risk and managing your emotions is so important in trading, because these things could really make you feel not too good, right? And then you may overtrade to try to compensate, and then you get into a bigger trouble, right? Because you are not following rules and a plan. So anyway, so now what's happening with this particular market? Okay, so this particular market is moving higher. We are still in the context of an Elliott wave turning point, which has not been proven wrong, because proving wrong the Elliott wave turning point is when we reach 42. So the bias for the stock is to move down, believe it or not, at least so far, technically speaking. Okay, so this is a longer term downtrend, and if Mr. Elliott wave is right, this is going to continue pushing lower. We got UFOs overhead, but of course those are very far. So if we look at shorter time frames, on the daily time frame, we have 55% probability with UFOs at 42, which is lining up with the Elliott wave break. So that may help. And then when we look at 55-minute time frame, we are in a UFO right now, 58% probability for price to go higher. So again, that stock, for many reasons, is more likely going to fall than not. So I'm not going to do anything about it at this moment in time unless I have more evidence, okay, that this is going to continue going higher. The other thing I'm looking at too as well is the fact that from a mass distance point of view, 0.91, it's 2 standard deviations, okay, that's too far too fast. Currently we are hitting 112, so we went too far too fast. And on top of that, from a duration, from a count point of view, the normal thing is 4 candles on the way up. We've been 5 candles in that climate already. So for all those reasons, that stock is supposed to turn and fall. Therefore, I'm not going to hedge my hedge. I did it with ADM because I had enough evidence showing that that stock was going to continue higher, and we did well doing that. At this moment in time, the stock looks strong. I will not say the opposite is true, but statistics suggest there is more probability for this to turn down. So I'm just going to leave it alone. And if it goes against me, so be it. We have the risk under control. We know how much is the most we can lose. And on top of that, in the meantime, we have other long positions in the portfolio. So if that stock loses, the other longs will start making money, and there will be an offsetting effect, which is why we got into this trade in the first place, is a hedge. Okay, so we're just going to leave it alone. And please, I'm going to move to the next trade. Please comment on the chat box if you have any question. Spending a lot of time with review today, which often happens on the Wednesdays, isn't it? But anyway, it's what it is. And then we got Twitter and on Royal Caribbean. If that's okay, Royal Caribbean, I think I'm gonna skip it because it's making a profit. The trade is looking great, to be honest. But at the same time, I believe that none of you were in the trade. So please confirm to me if anyone is in the Royal Caribbean trade. Let me know. But if you're not, I'm just gonna delete it and just work with other trades that we all benefit from the point of view of learning how to do proper options trading, with the tools and everything. Twitter is indeed a trade that you guys have. So let's take a look at Twitter. Okay, and here's Twitter. Okay, so here's Twitter, and Twitter is looking very good for this trade to end up with a profit. So I want to bring back Thinkorswim. You can see the profit of the trade here, $21. Back to top. If I look at the position and we look at the risk graph for Twitter, okay, so right click, risk graph. So here's the risk graph, and the one thing I want to bring to your attention, which is something that I said I would, but I haven't done yet, is I want to bring to your attention the break-even points of this trade, which are 76.10 and 53.90. Okay, 76.10 and 53.90. So why is that important? 76.10. Okay, because this is that line there, 76.10. Okay, and this purple line 53.88 or something like that, that is 53.90. Okay, so in other words, my purple lines that go from left to right are the break-even points of the trade. And as you can see, the statistical range, which, we got the blue lines in the middle and the red line above. So it shows that on the expiration date, which is October 29, it seems that the statistical range basically would take place between, let's call it 74 and let's call it 59, okay, where the break-even points are higher and lower, meaning that statistics suggest that this trade will end up in a profitable position, at least based on stats. And remember, we have UFOs above and below to defend ourselves. So in the 55-minute time frame, if I'm not mistaken, so it's all looking okay. Okay. So nothing to be done. We don't have the red line breaking the purple line. We don't have that, and because we don't have that, there is no tweak to be applied. There is no rolling of units. There is no massaging to be done. We just go with the flow. We let time pass. That's it. Okay, so that's what we're gonna do. So far, easy one. We have 1 week to go, and the trade will be completed for a full profit. And Royal Caribbean, it seems that no one of you got in it, so I'm just gonna delete it, not to confuse, even though it's a profitable trade, but it doesn't matter really. So that way we are all in the same place. Cool. Okay. Well, so much to talk about, and I'm just looking at the time, and 3 minutes to be the top of the hour. So really, we won't have time to put that trade in place. So again, tomorrow, like it happens many times on the Wednesdays, that we spend more time on trade management, and the Thursday we spend more time on identification of opportunities. So so tomorrow I'm confident we'll have a strong session, especially because many of the trades expired in October 15, so we got very little to review tomorrow. And we should jump into planning trades quickly. Okay, so guys, we got 2 minutes to go. What about you? You guys give me a little bit of feedback, just to know where you're at, just to know how's your trading going, how is it going with top, any struggles, any good news, any aha moments you had in recent times with your trading, any progress on completing your trading plan, tweaking your trading rules, backtesting some methodology. Again, please share. Let me know where you're at and how are things going, guys. The more we know about you guys, the more we can help you. So share, guys. Share a little bit of how things are going. And I'll take a sip of water because, of course, it'll take a little bit of time for you to type it. Joanne, sounds great. Really like reviewing the recordings. Yes, thank you for that, Joanne. Thank you for that. Actually, I'd like to bring a web page. I was using this one with holdings for IWM. So I wanted to remind you of two things. Okay, so I'm gonna go. Sorry, I didn't type this right. tradewithufos/live. I would like to go to this page, as well as would like to go to tradewithufos/Jose. So I wanted to remind you first on the live page, which is the one you're using now, isn't it? That when you log in, okay, so I will log in on my other computer screen. Just give me 1 second. That way I can talk about the other one too at the same time. So I'm coming back to the live page in just a moment. In the meantime, I wanted to remind you of tradewithufos.com/Jose, okay, which is a page where in the bottom part you have this question and answer area that I would like to really suggest. Okay, and again, you don't have to the live page, but I would really like to suggest in the meantime that you start utilizing it when possible. I wanted to remind you I have logged in now. I'm logged in as Jose Blasco, as you can see. And here, if you have questions, which is for sure, we are here to support you guys. So If you prefer to send an email, just send an email. But it would be so much better that you come in here, you type the title of your question, you type whatever the description of your question is, you insert pictures of the charts, make sure you share information enough so we can respond well, and then you will find your question in here and your answers too. So that is not only helping you, but it's helping in a major way the community as well, as we're building things up. As you can see, other members are posting questions, other coaches are responding, so there is a conversation going on, and all of those questions, I'm telling you, is going to speed up so much the process of you understanding the use of the tools and things like that. So please go ahead and use tradewithufos/Jose or tradewithufos.com/Becky or tradewithufos.com/Boyan, Pedro, any of the instructors really use their page, even though the question panel is generic for everybody using the website, but use their page, when you do. And then, so here is, here's what you're seeing right now, right? I can see myself here. And the one thing I wanted to point out as well, talking about recordings, Joanne, which you obviously know this, but many times we have members in the community that don't know where to get the recordings from. So they are here. On the upper part of the window, you have this drop-down menu, and you can just scroll down and find, all the recordings since we started having the private rooms on the website. There are more recordings on the YouTube channel, I wanted to point out, but I think it's good enough with 333. And all the recordings are there. Members in the community, okay? So don't know where to get the recordings. Another way to accelerate your learning is just use all that material, because it's we learn through repetition, guys. Okay, so that's how we learn. Mark, still working mastering top. Very good. Thanks for sharing that. And again, I think the Sunday sessions are key in that sense. Like Cerephony, I like visual. The features of the platform extremely insightful and time saving. Thank you for that, Joe. It's truly appreciated that you made that comment. Can I buy a verb? Very good. Yes, Christian, I have a major echo in the feed. Oh yes, of course. That was my fault, guys. Sorry for that, because when I opened the trading room, that sound was then injected back into you guys together with my microphone audio feed. Sorry for that. I should have muted that. Sorry for that, guys. I guess I drove you crazy for a moment. Sorry for that. Mark, you're speaking with an echo. Got it? Turn. Yes. Got it. Yes. Very good, guys. Thanks for the feedback. Thanks for joining me as always. And and yeah, thanks for your sense of humor, Mark. Sorry for that. Anyway, see you tomorrow, everybody. Keep up the good work. And again, be in touch. Be in touch with us. Be in touch with the other members of the community, guys. You guys share your contact information, collaborate, team up. Put time and effort, guys. Trading is beautiful. It takes time to master that skill. Hopefully with top, you save time and you have an edge and you go straight to the point. But still, just be surrounded by the community, guys. Don't be this isolated. Don't be alone. And for sure, count on us when you have questions. And by the way, when we do the psychology sessions and things like that, where you may okay, I don't feel like typing on the public help page because everybody sees my name, or even here in the private room, you may see everybody sees my name. Remember, when you log in, you can change the name of the chat. So again, there is nothing to hide and there is nothing to be ashamed of, to be honest. But at the same time, if you are not uncomfortable to say, look, I broke my rules last week and I lost 3 times in a row and it was my fault and I don't feel good about it, what can I do? But you don't feel good to say something like that, then we cannot help you, right? And if you don't feel good and you don't say it, you cannot be helped either. So maybe you just change your name or just send a direct email to me, a private message to me or Reynaldo, but again, seek for support, guys, because trading is beautiful, but we need to develop ourselves. So just count on us, okay? Keep up the good work, everybody. Take care, my friends. Bye-bye. See you tomorrow.